Imagine a metal so powerful that kings waged wars over it, explorers risked their lives for it, and entire civilizations rose and fell because of it. That metal, gold, shiny, irresistible, and worth more than money. It has been humanity's ultimate symbol of wealth and power for thousands of years. Imagine a metal so powerful that kings waged wars over it, explorers risked their lives for it, and entire civilizations rose and fell because of it. That metal, gold, shiny, irresistible, and worth more than money. It has been humanity's ultimate symbol of wealth and power for thousands of years. Gold isn't just a shiny rock. It's history in your pocket, a driver of empires, and the ultimate store of value, a shimmering thread connecting human ambition across millennia. More than 6,000 years ago, early civilizations stumbled upon this glowing metal in riverbeds and mountains, and something about it felt different. Unlike iron, it didn't rust. Unlike silver, it didn't tarnish. It gleamed in the sunlight as if it carried its own fire. That natural brilliance made it seem divine, almost supernatural. In ancient Egypt, gold was not merely wealth, it was sacred. Pharaohs were buried with golden masks, jewelry, and elaborate treasures because Egyptians believed gold was the flesh of the gods, a material worthy of eternity. Tombs were designed to protect it for the afterlife, reinforcing the idea that gold transcended human mortality. Meanwhile, in Mesopotamia, gold became a badge of authority and political dominance. Kings displayed it in palaces and temples, using it to reward loyalty and demonstrate control. Wealth wasn't counted in paper bills or digital numbers, it was weighed in shining metal. As trade networks expanded, gold naturally evolved from decoration to transaction. Around 600 BCE, the Kingdom of Lydia introduced standardized gold coins, revolutionizing commerce. Suddenly, value became portable, measurable, and trusted across borders. Merchants traveling vast distances, from Africa to Asia to Europe, could exchange goods with confidence because gold carried universal acceptance. It was consistent. It was rare. It was trusted. And trust, even then, was the backbone of economic systems. But gold's influence didn't stop at trade. It seeped into mythology, religion, and storytelling, amplifying its mystique. In Greek legend, the golden fleece symbolized ultimate authority and the right to rule. Across Asia and the Americas, temples shimmered with golden surfaces meant to honor divine power. Rituals, coronations, and sacred ceremonies placed gold at the center, elevating it beyond currency into the realm of spiritual symbolism. To possess gold was to possess status. To control gold was to control destiny. As centuries passed, empires learned that gold wasn't just a symbol, it was leverage. The Roman Empire amassed enormous gold reserves to finance military campaigns and infrastructure, paying soldiers and expanding territories through its glittering treasury. In West Africa, powerful kingdoms like Mali and Ghana flourished because of vast gold deposits, drawing traders from across the Mediterranean and Middle East. The legendary wealth of rulers such as Mansa Musa stunned the world, illustrating how gold could elevate a nation's global standing overnight. Meanwhile, the hunger for gold drove exploration into the unknown. European explorers crossed dangerous oceans not simply for adventure, but for the promise of golden fortune. The age of exploration was fueled by that shining dream, the belief that somewhere, beyond the horizon, untapped gold could shift the balance of power forever. Entire continents were reshaped by this pursuit. Gold became the silent engine behind expansion, conquest, and globalization. What makes gold's story so remarkable is not just its beauty, but its physical properties. It is rare enough to be valuable, yet abundant enough to circulate. It is malleable enough to shape into coins and jewelry, yet durable enough to survive thousands of years without decay. It does not corrode, fade, or disappear. That permanence gave ancient societies confidence. Gold represented stability in a chaotic world. When harvests failed, rulers still trusted gold. When political alliances shifted, gold retained its value. It became the original hedge against uncertainty. Across cultures that never interacted, gold independently emerged as the ultimate store of wealth, proving its universal appeal. From the tombs of pharaohs to Roman vaults, from African trade routes to legendary myths, gold consistently symbolized power, status, and security. It connected continents long before globalization had a name. It inspired stories, funded armies, built cities, and shaped the trajectory of civilizations. Even before the invention of banks, stock markets, or paper currency, gold functioned as the backbone of economic systems. It was the first true global asset, recognized, desired, and trusted almost everywhere on Earth. That enduring trust is why gold's influence never faded. While empires collapsed and currencies disappeared, gold survived, retaining its mystique and value across centuries. Its glow has reflected humanity's deepest desires: wealth, stability, dominance, and immortality. And as we transition from the ancient world into the modern age, one thing becomes clear: gold did not lose relevance as history advanced. Instead, it evolved. What began as sacred treasure and royal currency would soon become the foundation of global finance, central banking systems, and international trade. The obsession that once filled tombs and temples would eventually shape markets and monetary policy. Gold's ancient power was only the beginning of a much larger economic revolution. If gold shaped ancient empires, the modern world turned it into the backbone of global finance. As civilization moved from kings and conquests to banks and borders, gold didn't disappear, it evolved. By the 17th and 18th centuries, global trade was expanding rapidly, and nations needed something stable to anchor their currencies. Paper money was convenient, but trust in paper required something solid behind it. That something was gold. Governments began tying their currencies directly to gold reserves, promising that paper notes could be exchanged for a fixed amount of gold at any time. This system, known as the gold standard, transformed gold from a symbol of royal wealth into the foundation of national economies. By the 19th century, major powers like Britain and later the United States adopted the gold standard, creating a global financial structure built on the idea that gold guaranteed value. It brought stability. Exchange rates became predictable. International trade flourished because currencies were anchored to something universally trusted. For the first time, the global economy had a shared monetary language, and that language was gold. But stability came with limits. Governments could only print as much money as they had gold to back it, which meant economic growth was tied directly to gold supply. When gold discoveries surged, like during the California gold rush, money supply expanded. When gold was scarce, economies tightened. Then came the 20th century, and with it, world wars that tested the system like never before. Massive military spending strained gold reserves, and countries struggled to maintain the promise of converting paper into metal. During the Great Depression, economic collapse forced nations to rethink everything. The United States suspended the domestic gold standard in 1933 under President Franklin D. Roosevelt, marking a dramatic shift in monetary policy. Gold was no longer freely exchanged by everyday citizens, but it still played a central global role. After World War II, the Bretton Woods Agreement of 1944 redesigned the international system. Instead of every currency being tied directly to gold, the US dollar became the world's reserve currency, and it alone was pegged to gold at $35 per ounce. Other nations pegged their currencies to the dollar. In effect, gold still stood at the center, but now through the strength of the US economy. This system powered decades of post-war economic growth, rebuilding Europe and expanding global trade at unprecedented levels. However, as the US printed more dollars to fund wars and domestic programs in the 1960s, global confidence began to crack. Foreign governments held massive amounts of dollars and started demanding gold in exchange. America's gold reserves shrank under pressure. Then, in 1971, President Richard Nixon made a historic decision. He ended the dollar's direct convertibility to gold. The gold standard was officially over. The world entered the era of fiat currency, money backed not by physical metal, but by government trust and economic strength. It was a financial earthquake. For the first time in modern history, global currencies floated freely, determined by market forces instead of fixed gold values. Many predicted gold would lose relevance. Instead, the opposite happened. Gold transitioned from being the foundation of currency to becoming the ultimate hedge against it. Without gold anchoring money supply, inflation became a central concern. When governments printed too much money, currency values dropped, but gold often surged. Investors began viewing gold as protection, a safe haven in times of uncertainty. Throughout the 1970s, as inflation soared and oil crises rattled economies, gold prices skyrocketed. The metal that once backed currencies now acted as insurance against them. Central banks still held massive gold reserves, recognizing its enduring strategic importance. Even without a formal gold standard, the psychological link between gold and stability never disappeared. Financial markets evolved, stocks expanded, digital banking emerged, but gold maintained its position as a universal store of value. When political instability rises, when inflation spikes, when markets panic, investors instinctively turn to gold. It is seen as neutral, independent of any single government's policy decisions. Unlike paper money, it cannot be printed. Unlike digital assets, it cannot be hacked. Its physical presence provides reassurance in an increasingly abstract financial world. Gold ETFs, futures markets, and global trading platforms have made it more accessible than ever, blending ancient value with modern technology. Yet at its core, gold's appeal remains unchanged from thousands of years ago: scarcity, durability, and trust. The end of the gold standard did not diminish gold's power, it redefined it. It shifted from being the rulebook of finance to being the referee, watching over the system as a measure of confidence. When currencies weaken, gold speaks. When economies stabilize, gold adjusts. It has become the financial world's silent barometer, reflecting fear, optimism, and everything in between. From anchoring global currencies to standing guard against inflation, gold's economic revolution reshaped how nations manage wealth. And as we step into the 21st century, with digital currencies, global debt, and shifting economic power, the question becomes even more compelling. In a world built on trust and technology, does gold still matter? In the next chapter, we explore how gold continues to influence modern markets, central banks, and global economic strategy in ways that may surprise you. In today's hyper-digital, algorithm-driven global economy, you might assume gold is outdated, a relic of kings, caravans, and crumbling empires. But the truth is exactly the opposite. Gold has never left the stage. It has simply changed roles. In the 21st century, where trillions of dollars move across screens in milliseconds and cryptocurrencies challenge traditional finance, gold remains one of the most trusted assets on Earth. Why? Because while currencies fluctuate and markets swing wildly, gold carries something rare in modern finance: historical credibility. Central banks across the globe still hold thousands of tons of gold in their reserves, not for decoration, but for strategic stability. Nations like the United States, Germany, China, and Russia maintain massive gold stockpiles as a hedge against currency risk and geopolitical uncertainty. When global tensions rise, whether from wars, trade disputes, or financial crises, gold prices often surge as investors rush towards safety. It's called a safe haven asset for a reason. During the 2008 global financial crisis, as banks collapsed and stock markets crashed, gold climbed dramatically, reinforcing its reputation as a shield against systemic risk. The same pattern appeared during the COVID-19 pandemic, when economic shutdowns created uncertainty on a global scale and gold reached record highs. In moments when trust in financial systems wavers, gold becomes psychological security. But gold's modern influence isn't limited to crisis response. It plays a sophisticated role in investment portfolios worldwide. Financial advisors often recommend allocating a percentage of assets to gold to diversify risk. Unlike stocks or bonds, gold typically moves independently of traditional markets, meaning it can balance volatility when equities decline. Through exchange-traded funds, ETFs, futures contracts, and digital gold platforms, investors can now access gold markets instantly without ever physically holding a bar. Ancient metal meets modern technology. Meanwhile, inflation remains one of gold's most powerful drivers. When central banks print large amounts of money to stimulate economies, the purchasing power of currency can erode. Gold, limited in supply and impossible to manufacture artificially, often rises in response. It acts as a counterweight to monetary expansion. In an era where national debt levels are climbing and quantitative easing has become common policy, gold continues to function as a long-term hedge against currency devaluation. Yet gold is not just financial insurance. It is also embedded in cutting-edge industries. Modern electronics rely on gold for its superior conductivity and resistance to corrosion. Smartphones, computers, medical devices, and even aerospace technology use small but critical amounts of gold to ensure reliability. NASA utilizes gold coatings on spacecraft components to reflect radiation and protect equipment in extreme environments. So while gold symbolizes ancient wealth, it also powers modern innovation. Its dual identity, both timeless store of value and advanced industrial material, keeps demand consistently strong. Global supply, however, grows slowly. Mining is complex, expensive, and geographically concentrated, meaning production cannot simply surge overnight. This limited supply reinforces its scarcity, one of the fundamental pillars of its value. Meanwhile, emerging markets are reshaping gold demand. Countries like India and China have deep cultural connections to gold, particularly in jewelry and wealth preservation. As middle classes expand in these regions, consumer demand strengthens the global gold market. At the same time, geopolitical shifts are influencing how nations manage reserves. Some countries are increasing gold holdings to reduce reliance on the US dollar, signaling subtle but significant changes in global economic power dynamics. Gold, once again, sits quietly at the center of global strategy. And what about cryptocurrency, the so-called digital gold? While Bitcoin and other digital assets are often compared to gold because of their limited supply and decentralized nature, gold holds one advantage crypto cannot replicate: thousands of years of proven trust. Gold has survived empire collapses, currency resets, wars, depressions, and technological revolutions. It has never gone to zero. It has never relied on electricity or code. Its value is not theoretical. It is physical, tangible, universally recognized. That longevity creates confidence that transcends trends. In today's world of rapid innovation and financial experimentation, gold represents continuity. It connects the ancient past to the uncertain future. Markets may evolve, technology may advance, and currencies may rise and fall, but gold's core appeal remains unchanged: scarcity, durability, and trust. It is both a financial asset and a psychological anchor. When optimism surges, gold holds steady. When fear rises, gold shines brighter. That resilience explains why central banks continue buying it, why investors continue holding it, and why it remains deeply embedded in global economic architecture. From pharaohs to policymakers, from Roman vaults to digital trading platforms, gold's journey reflects humanity's ongoing pursuit of stability and power. It began as sacred treasure, became the backbone of global currency, and now stands as a strategic asset in an interconnected financial system. Gold is not outdated, it is adaptive. And as long as uncertainty exists in the world economy, gold will remain more than just a metal. It will remain a signal, a safeguard, and a silent force shaping the global financial landscape.